Hello and welcome to ETBFSI.com by the Economic Times. My name is Amol Dethe and I'm in conversation with R Doraiswamy, who's the CEO and MD of Life Insurance Corporation. Sir, glad to have you on this show.
Thank you and good afternoon. Tell me.
So to begin with, I would like you to tell us how's the new business premium shaping up? We have seen 17% jump in the profit, but there is a slightly change in the new business premium. So how do you look at new business premium and just decode the whole financial analogy of this quarter for us?
Yes, we have been having a tough time initially to start with because of the changes that we brought in the policy portfolio in compliance with the master circular issued by IRDA in October 2024. So starting from October 2024, we had to modify the products. We have to increase the minimum sum assured under the most popular plans from 1 lakh to 2 lakh. And consequently, we had a stress and a degrowth in the total number of policies sold during the period from 1st October 2024. But when we entered October 25, we started overcoming that, and the last quarter we have done very well in terms of number of policies sold, as well as a good growth has been brought about in the new business premium income also. So we are now showing a good growth and in the premium income that we have brought in. We are working hard towards taking it much higher during the current financial year.
Right. Okay. Noted your point, sir. The market share has been always, with LIC since inception. The private insurance companies came more than 20 years back. But now we are seeing a change specifically with the market share of LICs.
No, LIC's market share has been 100% before the market opened up, and from there, when companies start doing business, naturally the market share of the leader will has to come down. So, as I told in the last year also, I am not very keenly looking at the market share alone, but I would like to see how LIC is able to show a sustained profitable growth in the volume of business. So, as long as I grow, the corporation grows its business in tune with the industry, we should be comfortable, even if there's a small slide in the market share, because when the market expands, when there are new players entering, there has to be some sharing of market share. But we'll be looking at growth per se, and in line with that, we'll be looking at a good market share also.
So the marginal slippage of market share is none of your concern. Your focus will be on improving margins for your profitability.
We would like to remain a market leader by a distinct margin. There is no doubt about it. So we need to be a leader. We have been a leader in this sphere, and unquestioned leadership has been there. But we are looking at growing at a rate which is equal or more than the industry. That has been our focus. Yes, the competition has picked up. The competition is very stiff now. We have to work hard to maintain our position in the market. That's on the one side. When it's good for the market to expand, we need to also work hard to match up with the competition.
Well, certainly, I think that's a leader's talk, in fact, or leader's vision that, okay, it's okay with the market share, but I would focus on my profitability. But as the new companies are coming into the market, somehow the insurance pie is the same. In fact, what is the worrisome factor is the penetration number is still not improved, but in fact, it's marginally coming down. So in this particular regard, how are you improving your strategy? Which product you're focusing more on? And how do you see the growth specifically for your products now?
No, actually, I already informed in my previous discussions with you as well as others, the focus should be on expanding the pie.
Okay.
When India is marching towards Viksit Bharat, and one of the focus areas is insurance for all by 2047, every one of us have to ensure that the market expands and we reach out to the people who have not been covered. Insurance penetration as a metric measures the amount of premium collected pitched against the GDP.
Absolutely.
When the growth in GDP is higher than the growth in the life insurance premium, the penetration shrinks. That is something which has been worrying. But I would also look to have the number of people covered as a metric. How many people are insurable? How many households need to be targeted? Where are we reaching? This is one more area that I would like to be very clearly focused. So towards that, we are working on a complete geographical coverage, reaching every village, every town in all the states across the country has been the focus. As a leader in the market and also a socially responsible organization from the public sector, we have this mandate of ensuring that every insurable person gets the adequate insurance cover on the life insurance side. At least, of course, similar focus will be there on the health as well as individual personal line business as well as property. Our mandate is to see that we cover as many families as possible, as many livelihood earning persons as possible. We are working towards it. We are working towards enhancing our feet on street. We are looking at the agents in every village panchayat. We have started this Bhima Sakhi program, which has been inaugurated by the Honorable Prime Minister. We have completed 1 year. We have so far recruited 297,000 Bhima Sakhis. And we have covered around 52% of the village panchayats in the country. That has been the focus. We would like to cover every village and every town in the country.
So are you adding more to your
We'll be adding. We are looking at having at least one Bhima Sakhi in every village panchayat. It is not easy, but still we are scaling it up.
Okay. On your product mix, can you just give us some highlights in terms of which product is still sold the best from LIC bouquet? Where is your focus area? Because I still believe that people look at far more insurance and endowment products, more investment related products over the term insurance.
When it comes to LIC has always been viewed as a part of their financial planning. And in many households, earlier we were the only financial instrument that we had entered also. Now, banking has made a tremendous progress, and slowly the flare of the market has also been moving from deposits to market-based investments. That is why you find a huge volume of money going into mutual funds, and that has also happened. So today, if you look at it, in the urban centers, there is a move towards returns-based insurance where ULIPs are being preferred in a big way. Yes, at the youngsters level, there is a flare for term insurance, but when it comes to LIC, we have been having both the savings-linked regular insurance products, which are our endowment money-back type of policies. Also, special plans like Jeevan Utsav, which gives lifelong regular income from the plan, that has also been catching up. We have been looking at the market, finding out what are all the product gaps that we have, and we have been plugging those gaps by introducing new plans. This year we have launched 7 new plans, and many of them have done a reasonably good impact. We have got a exclusive plan launched for the female segment called Bhima Lakshmi. That's also catching up. We have Navjivan Shri, which was introduced in the current year, which has been doing well. And also on the these are all on the non-profit non-par segment. We have some par segment products also which are doing well. We are on the same breath. We are also focusing on annuities.
Okay.
Because as the country progresses, the number of people entering the senior citizen position is also increasing, and people have started planning for the retirement also through insurance products. So annuities as a segment is also growing, and we have started improving our contribution through ULIPs this year.
So my immediate question here is, banks are worried because the deposits are shrinking, because the new generation is looking at higher returns, more returns than in fixed deposit. Does that bother you as well? Because insurance practically will give you less returns, even fixed deposits.
Sir, that is a matter of concern, no doubt, for everybody, because there was a period when people were looking at safety of the savings, and deposits were considered, and regular conventional savings-linked insurance plans are also the flare. But slowly in urban centers, there is a change towards returns as a main focus, and that is where mutual funds have been taking over. And along with mutual funds, there is a good opportunity for ULIPs also. So ULIPs combine the benefit of term insurance and market-based returns. So that's also a good thing which is catching up. So our contribution from metros and Tier 1 centers in terms of ULIPs have also been catching up, and the well-heeled people in the remaining areas also, in Tier 2, Tier 3, as well as in rural areas also looking at ULIPs as a part of their portfolio now. So ULIPs, the share of ULIPs in my product portfolio has gone up, but still when it comes to the conservative population, we are having savings-linked products, savings products going strong.
Certainly. Sir, give us some sense on investor portfolio. I mean, how has been your market investment specifically? Where are you seeing, I'm not talking about the dedicated companies, but which sectors are you quite bullish on? Where is going to be your equity infusion at the highest level this particular year?
See, we are not a short-term investor. We look at long-term.
Yes.
We need to first ensure the safety of the investments, and at the same time, I go towards a reasonable return to the policyholders whose money he hold in trust. When it comes to non-par products, there the returns are guaranteed.
Yes.
Normally, the investments will slant towards fixed income securities. And also the regulation has a mandatory investment percentage to be made in central government securities and government securities and approved investments. So minimum 50% of your control fund will be in that. So naturally, our investments in fixed income securities is reasonably high. Though the mandate is 50%, we'll over around 66-67%. The remaining, yes, we have the flexibility to go into equities, but we focus on equities for a higher percentage of around 26-27 when it comes to par products,
Right.
where the responsibility is on to enhance the returns to the customers and provide a reasonable return in the form of bonuses.
Right.
When it comes to guaranteed products, we also look at guaranteed return product investments. So good amount will go into central government securities, state government SDLs, as well as on the corporate bonds. Yes, around 15-16% we take it to the equities. When it comes to the equity market, we are looking at the overall scenario available.
Okay.
So we are a long-term investor, and in the long term, we feel that all the sectors will be having their own share of growth.
I'm sure.
So the sectors undergo stress due to these cyclic changes at some points of time. But if you remain invested for a longer period of time, all the sectors are growing. That's what we are, one observation that we have. Plus, we have to broad base our investments also. So we cannot be focusing on any particular sector when we are handling such a huge volume of investments. So we look at all the blue chip companies. If you look at up to the top 200 or so, we'll have to spread our investments as a matter of diversification and also to get the return from all the sectors that we are looking.
Any view on the PSU banks, sir, where you are the largest shareholder in many of them?
Certainly, the banks have been doing very well. The banks had their own difficult time. They have crossed that. And now all the banks are doing very well. The NIM has also been improving, though not to the extent the private sector banks have done. But the public sector banks have also given a decent return. So when you enter such investments and the investments are allowed to run a reasonable period of time, we are likely to get a good return on that as well.
Any thoughts to encash these returns? Any thoughts on maybe encashing that equity?
As I told, see, the investments are aimed at improving the return to the customer. One. And we have generations of policyholders who will be exiting. So unless we realize the gains from the appreciation the market has given, those set of customers cannot be compensated. Also, under every product, in par segment as well as non-par segment, there is an assumed return which is built in while the product is priced. So when you are looking at that kind of a scenario, we have to realize the gains so that the benefits can be passed on. So to maintain this intergenerational equity among policyholders, we have to churn the portfolio. We have to realize the gains that the investments have seen from time to time, so that we get the best out of the markets. Yeah.
So one more question on the investment side. I have been covering insurance and banking since more than 15 years now. My always view is if RBI is a banker to the government, LIC is an investor to the government. And now the government has made a huge pipeline of disinvestments. How big are the opportunities for you?
We look at every opportunity. So we would not like to miss any opportunity. Okay. But every divestment proposal of the government needs to be analyzed for the long-term prospect of that. If you look at wherever LIC has participated, at the time of participation, it would have looked like
LIC came at the last minute because bailout investor, and I remember those.
But every one of those investments have given us a very good return on the long run. So be it ONGC, be it BHL, I'm talking for long-term investments, or be it look at IDBI or anything, anywhere where we have invested. We have entered when they needed capital.
Yes.
And we have seen those investments doing very well over a period of time, and we are getting a good return out of everything. So I feel that we have to look at every divestment proposal in its own merit and analyze and see what's the outlook for that, and then take a call on that. So we have been we need opportunities to invest, and divestments also provide us that kind of an opportunity.
Yeah, sure. So just one or two last questions. One specifically is about the industry. One, what is the major change that you see with your agents, your distributors, specifically after the GST rationalization? Because a lot of vendors, distributors are looking for, are going through this question. Fair enough that we are not going to charge to the policyholders, but who will burn the cost of that 18%? How are you going to look at that and deal with it?
No, see, the 18% directly is not a cost on us. See, what is happening? Initially, we had this output tax that we were collecting from the policyholder or the premium. Now that the GST reforms have brought about a change in the way that the individual lines of life insurance and health insurance business have been made exempt from GST.
Right.
So the premium that the customer had to pay has come down.
Right.
Has come down in the sense that they don't have to bear the GST on the basic premium.
Okay.
Where it is term insurance, it used to be 18%. Where it is a savings linked conventional plan, it used to be 4.5% in the first year and 2.25% in the subsequent years. And where it is a single premium product, particularly annuities, it used to be 1.8%. So now the customer is saved of that additional expense.
Okay.
So to that extent, it has become affordable, and we are looking at customers willing to take a policy more comfortably today, because they are earlier writing off that expense, which was not going to come back, even if it is a single premium investment or a regular premium. Today that they don't have to pay. But consequently, what has happened, we were paying GST on the services that we were availing, on the inputs, the purchases and other things that we were making. So today, particularly on the commission payable to the agent and all, and the GST on those inputs,
Okay.
where we had the provision to set off against the output GST. So today, with the premium being exempt from GST, we don't have that benefit of input tax being set off. So that there's a loss of input tax credit, which is a matter which we LIC has decided to observe it within our expenditure. We have not passed it on to anybody. So to that extent, there will be a stress on us, but we hope to overcome it by a very good growth on the top line.
Okay.
Okay. So as a percentage, it comes down. 2, by rationalizing our expenses and reducing our overall expense ratio, so that we can be able to absorb this.
Okay. Any number in terms of how much distribution expenses will be rationalized?
I don't want to
Sure.
get into that.
No worries. So one more question, which is a burning issue in the industry, is the misselling part. You are the largest insurer, and I'm sure you have a number of policyholders. But all said and done, the policyholders has been raising this issue of misselling. In fact, now recently the central bank said they're going to form a committee specifically to look at it on the bank assurance side. One, what is your view at misselling? How you, being the largest insurer in the country, trying to see that distributors are not misselling the policies to the policyholders?
It's a very valid question that you have raised. You would have been hearing this, the comments and the discussion that is happening at various levels. And I'm really happy to point out that misselling has been the least problem when it comes to LIC of India.
Fantastic.
While misselling complaints have been raised in many levels, even when the Honorable Finance Minister spoke, she spoke about misselling by insurance companies other than LIC of India.
Yes.
So we have been focusing on this very clearly. There had never been any attempt to have any forced selling, be it through individual agents or through the bank assurance types we have.
Right.
We have bank assurance type with a good number of banks.
Yes.
70 plus banks are our partners, and we have a good number of corporate agents, brokers working for us. But we have been ensuring that nobody is asked or forced to do any kind of a sale, and almost 99% or more than that of our sale were with the proper process having been followed, and we have the least number of complaints that we have received in terms of misselling. Yes, the industry has been facing, particularly when the borrowers were given insurance to cover that loan or whatever it is. There has been complaints, but I think the industry is addressing it now. With RBI also yesterday having announced that they will be coming out with a regulation on that. And this has also been raised in various forums. Banks have been advised to be very cautious on this. A lot of steps have been taken. I'm sure in the days to come, you will find this reducing in a great extent.
Oh, fantastic, sir. Let's hope that. One last question specifically on a lot of changes are happening in the insurance industry. FDI is 100%. New insurance might come in the industry. But my simple question is, despite having more than 25 life insurance companies, the insurance penetration didn't move to the extent that we had imagined. Obviously, most of them are sharing the same pie. So how do you see the outlook for insurance companies, specifically life, maybe going ahead in 3 to 5 years with 100% FDI new players coming up? Do you see the penetration going up?
Certainly, the government's intention in introducing the amendments to the Insurance Act is towards enhancing the penetration. So they have been looking at more number of insurance players in the market to cover the big population that we have. And the 25 life insurance companies also were not perhaps adequate.
Right.
So this move to make 100% FDI possible in life insurance sector is certainly aimed at bringing in more players. And I hope with this, those who are sitting and not wanting to share with an Indian partner their either management control or their decision-making powers might look at this as an opportunity and enter. So I expect some more players to enter the market, and that will certainly help in expanding the pie. That is what one. And also, the regulator has been nudging that the insurance companies should spread their wings and go to the hitherto not covered areas and ensuring that we open branches and to the entire length and breadth of the country and increase this. And LIC has been a partnering in this in a very big way. We are having a very good geographical spread, and we are in every geographical area of the country. And we have been planting agents and other distribution partners in all the areas and ensure that will be doing this. And our focus will be to ensure that the coverage spreads, the pie expands, and the market grows. So this has been our focus, and we'll continue to work towards it. I'm sure in the next 3-4 years, the efforts taken by the government, including strengthening the regulator's powers and other things, will be good for the industry as a whole and help in developing the insurance industry in the way that the government wants it to happen.
That was meaningful, sir. I'm done with my question. Just last one point. I guess I really like this particular point from your investor presentation of the quarterly results, where you have said that 65.37 lakh policies bought by women out of total 177.83 thousand policies sold in this particular, which simply means that more than 35% women have bought policies, which is an interesting trend.
Actually, as you notice, India in India, the savings mindset comes from the females.
Right.
So whether it is a family or an individual income earner, and what we find is the states where women empowerment is at a higher level, or even employment, particularly in sectors like IT, where a good number of women get employed. That's those states we are looking at. A good number of them participating in insurance as a part of their savings portfolio as well. So we look at states like Karnataka, we look at Maharashtra, or the states where female workforce is also high. It's also, and in the Northeast also, we are having a good number of states where this is happening. That is one reason. And also, a good proportion of our agents are in the female category.
Okay.
So that also gives them the comfort. So for instance, I was talking about Bima Sakhi as a program. Yes. We have 3 lakh agents now, 2,97,000 plus agents. So they also tend to cover the females, and naturally savings becomes the nature of females in India by tradition. So that helps.
That's interesting. Now I know where it is coming from. But thank you for sharing all the meaningful thoughts, and thank you for being part of this conversation. And thank you so much for watching this particular show.
Thank you very much from LIC of India. Thanks to the ETBFSI for doing this program as well. Thank you.
Thank you.